Wow, while Hang Seng crashed below 15,000, our traders went in to buy, and we're waiting the level of 16,031 to take profit because that is our target. But the thing is this, the bears are definitely looking around and waiting for the first blood to surface. Now, all this information will be ready for you in this very video. This is a must-watch video, guys. Don't miss it. All right, before that itself, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, itself, right, let's go back to this thing here. The China government is trying their best to save the economy. We all know that every time when they tried to come in to buy the stock market itself, right, the market went up, rally for a short moment, and then selling resumed. And we can feel that, right, this is being attacked from very international front. So we all know that the Chinese stock has lost more than $6 trillion since the peak in 2021. And of course, we know top hedge funds, Chinese funds, Singapore funds are now down pretty badly. So the question is this right now, is it time to buy some Chinese stocks? Now, to me itself, if you missed the buy yesterday, you don't chase it right now because I think that the selling will come in again. I mentioned it before that you'll come in again. So what we did is that yesterday we saw the market giving us a good signal right here at 15,000. We went in to buy right here, very nice price. We bought it here because our big boys indicator called KSI gave us a buy signal and we went in. Then after that itself, right, when the market pulls back to our technical point called MLP, the mid-level price, we entered again, and now we are holding the position, looking to sell at 16,031. So guys, this is how we trade in the market. And as long as you follow the rules, you should be able to make money. And of course, we have statements to show you. All right, now, more important thing is this. Now, traders are getting a bit complacent in US side. On undeniable, the US momentum stock ETF is now at a high level. Now, of course, if you based on the chart point, we're still pretty far, right? Even though we are now, all three indices are all at record high, but in terms of momentum, we are not there. And you put together with the NASDAQ, this Hindenburg omens, so you put it in again, you notice that we're now back to the same point. And of course, based on the MACD, we are also at the high point. So without a doubt, right, I cannot believe that there could be some profit taking in the near term. I know that by saying this for a couple of days, I mean, last few days, people have been telling me that this is like, market can go higher and stuff like that. But you look at what happened to Apple, look at Tesla, look at Microsoft, you will know that they are not going up anymore. And this is where you need to be very, very careful. Now, the thing is this, look at the number of new articles mentioning of the soft landing has came off right now. That tells you that people don't believe in that. But the thing is this, when the soft landing surge are no longer there, you notice that the recession is always very nearby. And now small business need to pay up to 10% interest on short-term loan. Now think about this, being at 10% is no joke at all. And if you look across the historical pattern, with the 10%, you can see that it is very clear you will see recession. So that's the reason why I feel that the reason why now the Federal Reserve people are all speculating that there could be more rate hike coming in because they know that the small businesses are wrapping up right now. And because of that, right, you can see layoff coming in like Unity, Wayfair, Google, Riots, they're all coming down. You can see that they're losing, people are getting themselves living laid off, right? And of course, this is not only that, you can see that even as Hasbro, Amazon, they're all cutting, all right, guys? This is no joking matter. If the market is at all-time high, the economy is doing well, then why are this company laying off people? So a lot of things doesn't make sense. And of course, you can see that the US metropolitan areas are having rising unemployment. Look at it, it's rising up at a very alarming speed, all right? The last time we see something similar like this was back here, so you look at it. It was here whereby we had a COVID, all right? So we understand during COVID period, people lay off, we understand. But now look at it, the speed itself is the same. So while you can be happy with the stock market going up, right, somewhere it's wrong. And I believe that the bears are all waiting. Because right now, right, the credit card interest rate has went above 20%. This is insane. And this is like total is now $1 trillion. So imagine if there could be a default on this amount, that will hit all the balance sheet of the banks and the credit card companies, right? Don't you think so? And now with the saving rate is now at 4%. Think about this. This is not able, they can't pay. So I believe that by March and April, we will see a full-blown of this happening in the market. And recently, the US dollar has been firming. Now, this is interesting because we are all expecting the interest rate to come down, right? So by right, the dollar comes down. So yes, indeed, the dollar came off. Yeah, the dollar came off, hit the high, about 107. Then it came down all the way. This is the dollar index to about 100. But the thing is once it hit 100 itself, it stabilized there and interestingly rebounded to 103. Down the very important now be 104. This figure is very critical. This is very important number. The market has to stay above 10, but stay below 104. Now, if the US dollar go past 104, that means that right, the interest rate itself right may not be cutting as fast as what everybody's speculating. Now, the thing is this, with that, right, we can see from history from 1929 until now, the yield curve inversion is always a very strong indication of a potential recession that's nearby. So you can see, right, there will be time lag, that's for sure. But once the time lag completes, then the recession will kick in. And of course, you look back again, you look at what happened in 2000 and 2008, right? Every time the lag time itself is for 25 months. So if you look back in December, where you saw the thing turns around, then that means, all right, December 2021 plus then 25 months, we are talking about right now. That means that by March to April, we could actually see that so-called recession coming in. So traders, you need to remember this. And right now for you guys, this is very important stuff. So remember, by before, okay, we're going to see a recession happening. Okay, sorry, my bad spelling it, writing here, between March to April of 2024. Okay, this is very, very important, guys. You need to remember this. Okay, all right, because I just want to know that you don't want to chase after the highest point of market right now, because look at it. This is the US bonds. Look at the TLT. Yes, came off, right? Now the thing is this, the bond market basically came off, and you can see the 10-year yields is moving up. Now, this doesn't make sense because we are supposed to have the yields coming down instead, right? But yet the yield went up. This is interesting. So to me, it's all right. Somewhere it just doesn't make sense. And it seems that the big boys who play bonds market, they know something going to happen soon. It seems that they know that the interest rate may not be cutting as soon as what you're seeing right now. So of course, you look at the S&P PE ratio across the board itself, right? You can see that all the big heavy PE like Tesla, 56. You can see that example. Let me just take a look here. So Costco, AMD, all these shows that their P ratio is more than 20. That doesn't mean that it means their price is not cheap. Unless you want to buy all these counters here, it's like Fox is at 8.9 PE ratio and stuff, but they are not performing. So if you look back into the bigger one like Microsoft, Apple, Google, Amazon, Meta, Tesla, oh my goodness, look at their PE ratio. This is really incredible, right? Example like NVIDIA is like 79.19. Wow, that's amazing. So if you're going to buy shares right now at 79.19, of course, you may say that maybe you can see 620, 650 and stuff like that for NVIDIA, but the risk is high because they are not really the best time to buy at current price right now. But again, this is your choice. Now, the thing is this, the leading economic indicator, the LEI, has declined for the 21st month in a row. All right, last date updated since January. And the thing is this right now, right? The conference board is now forecasting US GDP growth to turn negative in Q2 and Q3 of 2024. That push back, all right? So the thing is this, I said that we will happen to see it by the end of the first quarter. So I'm a bit early, but it's okay because market will always sell first before you get into that. And because of this, look at the insiders, they are really dumping the shares right now. There's really, I mean, this smart money, aka the insiders, are very smart, right? So if they're very smart and they're selling, then why are you buying? So this is something that you need to be very, very careful. And of course, you may say, but Cal, look at it. The put and call ratio is at low end. That means that no people are buying. Look, guys. You don't have the retailers or traders buying puts when the market is at a high. All right, but usually the puts will be at the put and call ratio will be at the bottom before the market turns down. So let's look back here again. This is what happened in November 2022, right? Look at where the put call ratio is at the low end. Okay, let's look at the stock market. Now, this is the Dow Jones back then as well. You can see that there was a one wave of selling where if you from 35,600, it dropped all the way to 34,000, down 1,006. Then after that as well, right? Let me just draw it for you, annotate for this. Okay, so here down by 1,600 points. Then it bottomed out, it rallied, okay, went up all the way. Let's see, from here 34,000 to the high here, 36,000. So it went up by how many points? At 1,700 points, okay. And then after that, from 1,700 points, it went all the way down to here, down 30. So it went down from 37,000, dropped all the way here itself. That means it's down by almost, sorry, that means more than nearly 4,500 points. Oh my goodness. So that happened, okay, during the period of 2-3 months. So if you ask me itself, right, we kind of near the top lows. I say that 38,000 is the high for now, I believe, and a pullback to about 37,000 in the near term is very possible, and that is where the market will likely do a small rebound. But if the market fails to hold again, then the next wave down could be as low as 35,600. But again, I repeat myself many times, right, guys? Until the catalyst comes up. Now, there are many catalysts going on, but thing is this, we need to understand that the boys are still not selling yet. The boys are not selling yet. Okay, so look at my TWB indicator. You can see at the moment now the boys are still buying. You can see that although it's been going sideways, but the boys are still buying. The momentum is still bullish. The only problem is that the calculation, the day-to-day intraday up-down momentum itself, right, is not favoring it. So to me itself right now, right, the Dow itself, if you want to sell, you try to sell anything above 38,000. At least that's a pretty good bet. In the near term, we don't see selling yet unless a certain technical point breaks. So the first blood is not drawn out. Okay, just wait for a while. If the market do break below 37,700 or more, then maybe we can see the first wave down to about 36,700 area, whereby that will be. And the 95% target level now is still trading at 36,232. All right, guys. So remember, I'm just repeating myself one more time. Be careful. The boys, the bears are lurking. You just need to watch out for them because they will come. And once they come, they will not be nice. All right. So hopefully you like my video. Like, subscribe, and share my video. It's Kel signing off. Take care. Have a great day. Bye-bye.